Ladies and gentlemen, good day and welcome to the Jindal Drilling Discuss Q1FY26 Results Conference Call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Varatharajan. Thank you and over to you, sir.
Thank you, Nidhi. A very good afternoon to everyone. It's my pleasure to welcome all the participants and the management represented by Mr. Raghav Jindal, Managing Director, and Mr. Kaushal Bandani, Deputy General Manager, Investor Relations and Finance, for this call. I'll hand over the call to the management for their initial comments and we can move on to the Q&A after that. The floor is yours, sir.
Thank you, Mr. Varatharajan. Good afternoon, shareholders, and thank you for joining our earnings call. We've had a very good quarter as was expected. Revenue and EBITDA improved due to recent acquisition and full quarter operations of Jindal Pioneer. Further, one of our rigs, Jindal Explorer, was dehired in May 2025 and is currently under refurbishment. It will be redeployed in October 2025. However, this dehiring has not impacted our profitability. I will briefly summarize key financial indicators. On comparison of Q1 FY26 with last quarter Q4 FY25, total revenue was similar. However, EBITDA increased by 23% from 87 to 107 crores. PAT increased by 5% from 53 to 55 crores and EPS increased from 18 to 19 rupees per share. These figures are standalone figures. The consolidated figures are even better at the PAT and EPS level. The increase in profitability was on account of income from owned rig Jindal Pioneer. Whilst revenue from operations increased from 245 crores to 254 crores, there was a decline in other income due to forex fluctuation, leading to similar revenue as last quarter. The improvement in earnings was communicated in our earlier calls and we have managed to live up to the guidance given. I would now like to take you through our earnings presentation. The first slide talks about Jindal Drilling and Industries. We are the leading offshore drilling services contractor in India's oil and gas sector. We have more than 35 years of experience in the sector of offshore drilling. We are supported by an efficient and experienced operational and management team who ensure that our efficiency is not compromised and we achieve highest levels of safety. We have 6 rigs in our fleet and are currently operating 4 with ONGC. 1 rig, Jindal Explorer, is under refurbishment for next ONGC contract and 1 rig is currently engaged overseas. In addition to offshore jackup rigs, we also provide mud logging and directional drilling services. The rigs that we have are detailed on the next slide. In addition, we have also put out the total order book of the company, bifurcated rig-wise, and we have bifurcated the order book year-wise so that the amortization of order book is easily understood by interested individuals. The quarterly highlights and detailed financials are on the next 4 slides. A key point to note is on slide 11 where you would see that our net cash position has not changed despite the acquisition of rig Jindal Pioneer, which only indicates strong operational profitability. Our shareholding structure is given on the next slide. That concludes our brief, and we would now request Mr. Varatharajan to open for questions.
Thank you very much.
Please take it up, yeah.
Yes, sir. Thank you very much. We'll now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Apurv Bandi from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah. Thank you, sir, for the opportunity, and congratulations for the good set of numbers. So my first question is on the what is the book value of our rigs? The book value is currently 795 crore in the books, but what is the market value, I want to ask?
Market value fluctuates depending on the availability of rigs in the market and the crude oil price. The most recent rig purchase and sale was that of Jindal Pioneer, which was done for $75 million. That is a rig which was manufactured in 2015.
Okay. So, but this Jindal Pioneer is the one which we have bought recently, right? I want to ask that the old rigs which we have, for example, Jindal Supreme or Discovery one, right? What is the market value for those rigs and the book value? I just want to understand that the value which we depreciate, right? The current value of the rigs is less in book value or is more in the book value than the market value?
Market value is generally higher for old rigs because of depreciation, and the fact that these rigs are participating in the same tenders in which new rigs are also participating. But if you're looking for a figure, we cannot provide that to you right now because we have not undertaken a valuation exercise.
Okay. And so my next question is I understand that we have done a new acquisition in the recently, but when are we planning for the next acquisition, or how we are headed for the new growth in the company?
So we are actually based on the ONGC tenders. ONGC tenders have been a little sluggish. If there are new tenders coming up, we will be looking at further rigs other than the ones which we have in our fleet. Jindal Pioneer is going to be bid in the ONGC contract whenever they come out with the tender. And other than the rigs, we are not really looking at anything more as of now.
And according to you, the current demand is sluggish, right, as you have mentioned. So the charter rate also depends on that.
We saw a few tenders by ONGC which were either delayed or cancelled. So that this is also because there is some work going on in ONGC with BP, and which is supposed to end this year, and they will be coming out with new plans for 2026.
Okay. Thank you, sir. All the best. Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Faisal Hawa from HG Hawa, and please go ahead.
So 3 questions. What is the current per day hiring rate of rigs in the international market? Second question is that Mr. Raghav Jindal in a previous con call had mentioned that this 40,000 per day rig that we hired out to ONGC was more like a one-off, and we expect much better rates in coming ONGC auctions also, and particularly when we have another rig coming up for auction in October, I think. So does the statement still hold true, or there are some situations which have changed again? Third question is that there are some rigs in one of our sister concerns also. So is the management thinking in terms of consolidating all this in one balance sheet?
So the international rig rate currently is upwards of 80, between 80 and 90,000. Yes, the statement that the last tender went for a very low price was a one-off, and we expect the rates to become better again, holds true, because it was due to competition that one of our competitors bid a very low rate because they had 3 rigs idle and they wanted to desperately get one into action. So it was a one-off, and we hope to achieve the international market prices or slightly lower what ONGC usually gets back again. Consolidation, nothing as such in mind, but eventually we would prefer to have all the rigs in one balance sheet with no timelines for that.
And sir, continuing from the previous participant's question regarding the present value of the rigs, I know for a fact that these rigs would be valued at much higher than book value. But most of the rig owners all over the world are at present not even making like a simple interest on the current value of the rigs. So what could change from here on? Do you feel that many of these people would grow tired and sell the rigs, or maybe the rates will further go up to really justify the capital investment of such rigs?
See, if you have to buy a new rig today, it is upwards of 250 million. And only the new generation rigs are really which have value, and if there is no contract, then people are selling it. People are selling it as low as 60, 70 million as well. And if there is a demand for one particular rig and it is being seen, we've been offered rates of more than 130 million also. So like what Kaushal said, we don't have it's very difficult to estimate the market value of these rigs. It all depends upon supply and demand at that particular time for a particular aspect.
Okay, sir. I'll come back in the queue for more questions.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. The next question is from the line of Faisal Hawa from HG Hawa. Please go ahead.
So, sir, can you give some estimates as to what our profitability will look in the coming year, given that most of the rigs are hired for longer time, and what kind of capex that we will probably also have in this coming year, particularly this FY25-26?
In FY25, our revenue was 884 crores and EBITDA was 237 crores. In FY26, we estimate that revenue will be in excess of 925 crores and EBITDA will be between 360 to 380 crores. Going forward in FY27, even though there are a couple of rigs getting hired in FY27, our revenue will be almost 900 crores in FY27 and EBITDA will again be in the range of 360 to 380 crores for financial year FY27. This is assuming that Jindal Pioneer gets deployed at a very low rate of $40,000 per day. These are very conservative projections. I want to stress this repeatedly that these are conservative projections based on an assumption that Jindal Pioneer would be deployed on the next contract at $40,000 per day. I am not saying that Jindal Pioneer will get deployed at that rate. We expect the rates to be much higher, but so that our projections are not overstated in any shape or form, we have taken a conservative view. So, in summary, the profitability that we will achieve in FY26 will be replicated in FY27. And if rates go up in that interim period, then profitability in FY27 will be higher than the profitability in FY26.
And is it a good assumption to make that our depreciation will be quite higher now and interest outgo will be almost zero? So basically cash PAT will almost mirror the EBITDA?
That is correct. If you see, our finance cost has continued to decline, and it is only 2.5 crores in June 2025. This will further decline as and when the gross debt is paid, and depreciation will also increase when more rigs are acquired, not before that.
Okay. But our operating profit in the first quarter was around 107 crores. So, do you think that this 380 crores is being a little conservative?
Sir, these are reasonable estimates because Jindal Pioneer is a profit-making center and it is expected to be dehired in September of this year. And then it will go into refurbishment. So for the third and fourth quarters of this financial year, we do not expect any income from Jindal Pioneer. That is why we... Yes.
I understood. So basically, will we also play contrarians and if we get some rigs at very good rates, try to buy them out now that we can easily raise debt at very good rates?
Yeah, so like I told you, if a contract in ONGC is there and we have more rigs that we can provide, we would definitely be looking at acquiring them.
And even renting them?
Whatever is available, either a bareboat charter is one option, or the other option which is more feasible is for us to just buy them out.
And sir, is the management doing anything to improve the liquidity on the stock in terms of because our equity also remains quite low, and the dividend payouts so far have been not very high. So now that the cycle has turned for us, are we looking at doing anything on that front?
I really can't comment on that.
But we will definitely not put in any funds into equity mutual funds or anything of that kind, or if we have extra liquidity.
Mr. Hawa, can you please repeat your question? We missed that.
Are we on record to say that we will not put the liquid funds into any kind of equity mutual funds or this thing going forward?
We will not invest operational surpluses in equity mutual funds. We want to retain the operational surplus because we have to incur refurbishment expenditure as and when rigs will get dehired.
Okay. Thanks a lot, sir.
And then that is amortized over the duration of the contract.
Okay. And can you give some light as to what the ONGC projections are for CAPEX or something, or these are things which are not really very reliable to even take any kind of strategy on?
We know that they have another tender coming out by September. And other than that, we don't know much.
So, is there any connection between new oil being discovered in various regions and kind of the rigs being deployed, or there is no such connection?
Like I told you, will go up because they are working with BP right now for the last 2 years, last 1.5 years, another 6 months to go. They will come out with a more aggressive and a better plan on how to drill. So we can expect them to become more active.
And do we have any connects with Aramco also, or these are again open tenders and anyone can participate? And
yeah, it's open tenders and we can participate, but we are not really wanting to look at Aramco as of now.
Thank you, sir. I appreciate you answering my question so well.
Thank you. The next question is from the line of Adarsh Hinduja, from an individual investor. Please go ahead.
Hi, a lot of my questions were answered in the previous question, but I wanted some more clarity on Jindal Pioneer. Assuming ONGC tender does not go through for some reason, do we have a backup plan for that rig?
We are already speaking to some international companies as well as in India. So yes, we do have a backup plan.
Okay, great. And out of curiosity, any reason why you wouldn't want to work with Aramco?
Aramco is quite uncertain. Like you must have heard that they dehired about 20 rigs in the previous years. So the tender is very volatile. They can cancel or amend the rates at any time. And it's usually not a very long-term period contract, so the rates are higher. So we prefer stability. That's why we were with ONGC. Saying that, if there is opportunity and if we have a rig available, we would not shy away from bidding in their contracts.
All right. Thank you.
Thank you. The next question is from the line of Apurv Bandi from Whitestone Financial Advisors Private Limited. Please go ahead.
Yeah. So I just have one follow-up question. Is it fair to assume on the depreciation side that 38 crore per quarter run rate would be there for the year, or we should expect more depreciation than this?
38 crores is a fair figure for the rest of this financial year.
Okay. And similarly, interest rate which we have got for this quarter would be the same run rate for the following years, right?
It will be lower because the interest rates have come down in the June quarter, and our debt is also gradually reducing. But we are net cash. Our net cash position will improve.
Okay. So my second question is on the Pioneer side, that you have mentioned that in Q3 and Q4 there will be no income for the Jindal Pioneer, right? So the revenue increment which we are assuming for this year, like 985 CR plus, so this completely revenue increase would be from our old rigs?
So revenue increase will be because in previous financial year, Jindal Supreme was operating for less than 6 months. And in this financial year, Jindal Supreme will be operating for 12 months.
Got it. And in the FY27, we are assuming that the almost same figure in revenue, around 900 CR. So, but in the next year, Pioneer would be contributing to the revenue. So we are not added that contribution in the revenue, is it? Is my understanding right, or where am I missing?
I've already mentioned that we have taken a very conservative rate.
Mm-hmm. All right. All right, sir. Thank you.
Thank you. The next question is from the line of Maitri from Sapphire Capital. Please go ahead.
Yeah, hello. Am I audible? Hello?
Yes.
Yes, ma'am.
Yeah, so the last time Pioneer was taken on a very low per day contract, and now we are again bidding for an ONGC contract. So what sort of confidence do we have that another competitor won't bid just as low as the last time it happened?
I believe they must have learned their lessons. They left $20,000-$30,000 on the table. That was the difference between L1 and L2. So I just hope that they have the brains not to bid as low as that.
Okay, and why not take Pioneer for the international contract? Because we have a better...
It also does not reflect in the international market prices. So definitely they have learned that.
Okay. And why not take Pioneer to the international market rather than taking it to ONGC?
So we are open, like I told the gentleman before. We are looking at some international operators as well as other Indian operators in India as well.
Any names you would say?
No, I would not divulge that.
And any... Oh, no, that makes sense. And any recently rig that has been contracted, any prices do you have that currently in the market? What's going on?
In ONGC was our last rig, and internationally, a few have been around $80,000 to $90,000.
Okay. Yeah, that is it from my side. Thank you.
Thank you. The next question is from the line of Jitendra Hiru Punjabi from EM Investco Capital Advisors Private Limited. Please go ahead.
Yeah, hi. Thanks, guys. I have two broad questions, right? Beyond the next 12, 18 months where a lot of the discussion has been, can you articulate how do you think about the business? How do you intend to allocate capital? And what's the high-level thinking on, adding new capacity or diversifying differently?
So we do expect, like I said, ONGC had a little interim period of these 2 years where the demand was sluggish. We expect, and that's what the ministry also wants, India to produce more and more oil. So we see this market quite bullish in the coming times, and the rig counts to go up. We would like to invest in more rigs when the opportunity is right and the tenders are there, and provided we get a available rig in the international market. In terms of increasing the rig fleet is going to be one area where we increase capital. And diversification, there are certain thoughts, but nothing to really come forward with a plan right now.
Okay. And the second question is, what is the net cash position today and how are we keeping that cash?
Cash is invested in liquid mutual funds.
And what is the amount today, as on today? Roughly?
As on 30th June, the net cash position is 112 crores. The way we arrived at that figure is by deducting 121 crores from the total liquidity of 233 crores. The debt is 121 crores and total liquidity available to us is 233 crores.
Okay, understood. And if I may sneak in one more question. So we've been seeing some of these actions on some of the Russian-linked companies by the U.S. in recent weeks. Okay, I know we don't have anything directly connected there, if it's my understanding, but I'd just love to understand if there's any second level impact or damage or any implication of what's happening in terms of these policy actions on us.
I don't see any reason for ONGC or any other company to do badly or better, because India is only looking at improving its oil production in the coming future, and it will only benefit us with the operations in India.
Okay, lovely. Thank you, guys. Thank you so much. Really appreciate this. Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. A reminder to the participants, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Thank you, shareholders, for participating in the earnings call. We are growing as a company. and as and when there is an update, we will ensure same is provided to you. Thank you to Mr. Jindal for taking time out from his schedule, and thank you to Mr. Paratharajan for organizing the call. Thank you.
Thank you very much. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.